Welcome back. There's a lot of action here in the CNBC-TV18 Motilal Oswal studio. Thanks a lot for joining in this morning. In just a couple of minutes from now, we'll have the pre-opening rates kicking in. But let's get a quick handle on what happened in the macro environment. Members of the RBI's Monetary Policy Committee remain cautious on inflation, but are divided on how it should be tackled. So are there more rate hikes coming or not? Lata Venkatesh is here to give us more on that. Lata.
Well, actually, they've all harped on inflation in a big way. The governor said the CPI fall in December was only due to veggies, and even the FY24 is only 5.3. You know, their target is 4. So it's a very protracted move towards the target. Rajiv Ranjan said pretty much the same thing, that only the intermittent parts are going down. The steady state inflation, which is core inflation, is still up. Patra also says that inflation is coming in the way of growth because people are not able to consume, and investors, India Inc. is not investing because of the uncertainty of prices, so one must keep it down. But, you know, they were as hawkish in the press conference also. We were not getting any more hawkishness in the minutes. Coming to the external members, Dr. Bide seemed to agree largely with the RBI members, but again, it didn't sound extremely hawkish. The two members who voted against the rate hike, Dr. Verma and Ashima, outright dovish, saying that, you know, the rate hikes are coming in the way of growth and RBI is overdoing it. But we must remember that just like the FOMC minutes, the MPC minutes are also outdated by the numbers that have come after the February 8th meeting, the Indian inflation being much higher. So chances are we are going to see, it's an open and shut. It's kind of still 50-50 with respect to April. We still have the February number, which we will get before the meeting in April. So with these minutes, I don't think you're any smarter about guessing the April decision of the Reserve Bank.
Okay, Lata, thanks a lot for that. Well, let's move on then and get to the F&O side of the market. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, good morning. Do you see this market moving downwards or rather seeing incremental losses? And will that 200 DMA get tested, in the next couple of days? What's the strategy on individual stocks as well?
Good morning, Sainya. Thanks. We have seen that Nifty has been making lower highs, lower lows from last 4 trading session. Bank Nifty has seen more decline, corrected by more than 2,000 points from higher levels. And today we have monthly expiry. So I think some more pain could be there. Bounce could be sold here. If you look at month-on-month basis, this is the third expiry which is negative, and Nifty is down by 2%, while Bank Nifty is down by 4%. And many F&O stocks are adding built-up of short position. So which indicates some negative bias could continue at higher levels. However, after the recent fall, the decline may not much, but negative to range-bound bias could be there, and bounce could be sold in the market. And we believe that with hurdle of 17,777, index has potential to retest the budget low of 17,350. Similarly, the Bank Nifty has potential level of 39,400 zone. Now, looking at stock wise, recommending to buy on ITC. This stock has rallied by around 13% in this series, trading higher than its volume weightage average. One of the strongest counter in the entire F&O space, forming a pole and flag price pattern which has bullish implication. So recommending to buy ITC with a stop loss of 373, looking for an upside rally to us 405 level. Two negative idea. First sell is Godrej Property. This stock has given a breakdown, trading at 2 years low level. Huge shorts are carrying from current series to next series. So recommending to sell on Godrej Property with a stop loss of 1130, looking for a downside move towards 1060 level. Second idea is sell on ZEAL. Here we have seen 16 months low breakdown. Major trend is negative. Huge shorts are there with negative rollover. So ZEAL one can sell with a stop loss of 211, and stock can decline towards 195 level.
Okay, thanks a lot, Chandan, for that. Well, let's do one thing. Let's focus on the FMCG space now. Nuvama released a report saying that the El Nino is likely to derail recovery in the rural FMCG space. Abneesh Roy, Executive Director at Nuvama Institutional Equities, joins us now to talk about that. Abneesh, the thing is, this year there is a lot of climate change issues that the rural part of India or the agricultural side will have to face. Now, this could mean not just the El Nino, but you also have the IMD talking about a heat wave, and this could mean wheat prices could be all over the place. What do you think the impact of this would be on listed companies? Which are the companies that you would be cautious on, and where are you slightly more optimistic?
Sure, thanks. Yes, we released a report on the El Nino impact. So yes, El Nino is important. It has an inverse relationship with the monsoons in India. India has already seen 4 successive good monsoons. So probability of one more good monsoon mathematically is a bit of an issue. If I see rural demand for staple companies in Q3 and Jan-Feb, there is some green shoots visible. We have also seen the core reasons for the slowdown in rural. That was essentially very high fertilizer prices and very high diesel prices. We have seen correction there from the peak. Still not to the desired level, but there is a correction. Also, as of now, the wheat output is expected to be quite robust, but you did highlight that, yes, because the temperatures are high, there is a risk. Last year also, we saw the same thing. If that happens, it could be a negative. On an overall basis, I do see margin recovery for most of the companies. So we'll be positive on ITC, Godrej Consumer, Britannia, and Hindustan Unilever. We also like the paint stocks, because in paint stocks, we are seeing recovery in the demand in Jan and Feb, and we expect that in Q4, most of the paint stocks should deliver a high single-digit kind of volume growth, and there should be some margin recovery also. So overall, yes, we have to be selective, but yes, El Nino is a key issue to watch out in the monsoons.
Abnish, hi, morning. I think you track Z also. I'll just get to that. We'll just get to that in a bit. But you know, since monsoons and how they pan out will be a big topic of discussion, has El Nino, because we've had 3 years of La Nina, right? So has El Nino been declared already that this will be, and if you could just explain what this means as a shift compared to what we've seen over the last 3 years.
Sure. So yes, El Nino currently, full clarity is not there. These forecasts are by global agencies, and they have also said that we'll get more clarity in the April, because these are a bit difficult to really give. But if you see in the previous El Nino impact a few years back, there was an impact on monsoons. But yes, so I will say in terms of full clarity, I think April will have more clarity. So definitely 4 good monsoons have happened. So probability of that also 5th good monsoon, I think that is a challenge currently. So yes, there is not full clarity, but these are global forecasts, so it has to be taken in that context.
Okay. So in your top picks, you have Britannia, ITC and HUL. Tell us a little bit about what the upsides could be for these stocks. I mean, if you look at it this year so far, right, not much has happened with respect to these names. Of course, ITC was the big mover last year, but I think this year the move has been, okay, it's still almost a 16% in 2023. What's the risk reward like at this 380 price for ITC, and what is the target price on the other stocks?
Absolutely. So ITC, we are quite positive. We have a target price of 450. So last year also Nifty, one of the top returns came from ITC. We would expect that to happen this year also. Budget was quite okay, and we do see market share gains for the legal cigarette players. For GCPL and Britannia and HUL, it's a common theme. Palm oil correction will give them firepower to increase ad spends and also expand EBITDA margins. So that is the reason why the profit growth in these companies could be easily 15-20% and even beyond for the full year in FY24. Already we saw Britannia and GCPL deliver very handsome numbers in Q3. So that trend will continue. So yes, we have to be selective, but FY24 will be an year of margin improvement, and the rural recovery should accelerate if there is no El Nino impact.
All right. Abnish, very briefly, you track, I think you do track Z, right? Any thoughts on the news flow this morning?
Sure. So it's a negative development which happened post-market yesterday. So there could be some negative impact on the stock. Now, I would expect Z to file in the appellate tribunal NCLAT. So in the past, we have seen that NCLAT can give a different judgment. We saw recently in Z-Learn, for example. Z has already provided 200 crore for such issues. So P&L impact is not really there. There could be a cash flow impact if an adverse judgment happens. But Puneet has yesterday clarified that, yes, they will take all steps to make the merger go ahead in timely direction. So I would say that in the entire scheme of things, the numbers are not very high. If you see, the IndusInd issue is 89 crores, and overall Z has provided 200 crores for such kind of issues. But yes, it's an adverse development, but we would need to see what NCLAT does now.
So can be settled and moves to the NCLAT. Thanks very much, Abnish. Appreciate you joining in. The Z stock in the pre-open, I think, is down about 4-5%. It's reacting to the news flow. Now, 9:10 is where we are at. 5 minutes to market open, but let's get the 9:10 calls out of the way. Sudarshan and Mitesh are back with us. Sudarshan, why don't you go first? What do you have on your list?
Berger Paints. Berger Paints is a buy with a stop under 560.
Okay, Mitesh, how about you?
I'll go with a sell on Ashok Leyland with a stop at 146.5 and a target of 137.
Okay, just a couple of more stocks that you want to look at, right? Mahindra CIE, the numbers are very good this time. So the stock is up in the green right now, up about 2%. You have 8G Infra that has emerged as the lowest bidder for a project by RVNL. So 8G Infra is also in the green. But let's get some more stocks going. Z Entertainment is in focus. Nimesh is here to tell us why. Nimesh, over to you.
Hi, Sonia. Morning. So as expected, Z has started in the red. But you heard Avnish as well talking about whether it's not a big amount. They might go to the NCLT as well. So most likely they're going to file in the NCLT today. That's the feedback that I have. Now, apart from that, from a brokerage point of view, UBS has put out a note today morning. They maintain a buy. They believe that the amount is very small, of just 83 crores in the dispute. And you know, though it can delay the merger forward. So there could be a further delay as far as the merger with Sony is concerned. But Z has two options, either to pay off in dispute or file in NCLT. So most likely the NCLT filing should happen today. So Z will open in the red for sure, but I guess might recover in the second half if there is an NCLT hearing ruling in favor of the Z.
Okay, all right. Thanks for that, Nimesh. We'll keep an eye out on that. Mangalam is back with us to tell us about Sonata. Big acquisition, Mangalam. For starters, the stock is more or less flattish.
Well, it's the biggest acquisition that Sonata Software has made. They've gone ahead and acquired Quant Systems Inc., which is a Texas-based IT services corporation. Now, it is big primarily on account of the size that they are paying to acquire it. Upfront payment of $65 million, plus additional payment of $95 million over the next 2 years based on some achievements, and additional target-based payments as well. So these are some things that we'll have to monitor, primarily because the scalability is important out here. The company has done almost $37 million worth revenue in CY22, which is a very small amount compared to the company's own Q3 revenues of nearly 2,300 odd crores. They've, relinquished their entire cash on the books on this upfront payment. The cash on their books was close to around 600 odd crores. So the margins and scalability is something that we'll have to monitor. The stock has rallied 14% in Feb so far. Let's see where it goes after this acquisition and whether the street considers it to be an overpayment for a company.
Okay, that's important. The margin and scalability, as Mangalam was telling us, and we will pose these questions to Samir Dheer, who's the MD and CEO of Sonata Software. That happens at 11:15 a.m. Later today, so don't miss out on that. Just a couple of minutes left before the markets open, and let's just take a look at some of the stocks, right? Sonata, I think in pre-opening, I didn't take a look at how that one is doing post the acquisition, so we'll watch for that. Lemon Tree has signed a license pact for a 47-room hotel in Bhopal. So Lemon Tree is doing pretty well. And in any case, that whole travel entertainment space has picked up quite a bit. And a couple of others, Tiger Global sold 1.9 crore shares in the disclosure data for Delivery. So Delivery is another stock that we could be looking at this morning. So that let's see how that one shapes up. But Z Entertainment is really the one that is under quite a bit of pressure. In fact, Mitesh, wanted your thoughts here on Z Entertainment. Do you see further downside?
The stock has already been in some kind of a declining trend, and I think we are far from over with the decline. I think eventually, while it may recover today and some kind of pullback may happen because the decline has been there for the last few days, but I think it's heading towards 175, 170 zones in the medium term. So slightly negative outlook.
Okay. All right. Only 30 seconds left for the markets to open, so we're going to brace ourselves for that. Although the pre-opening rates are indicating a mildly positive start, let's not forget that it's been 4 straight days of losses and the bears have been in control of this market. The Bank Nifty is the one I'll watch for very closely. Yesterday, it closed below 40,000 for the first time since October of last year, and there's been so much pressure on the banks. The index itself has lost 9% from the December highs. So keep an eye out on that. And the 200-day moving average of 17,349 is something that perhaps could be tested in the next few days. At least that's what experts have suggested, given the track record so far. Also, F&O expiry today, so we'll be keeping a lot of those cues on our radar. Here comes the first tick on the index. It is very, very quiet. So the Nifty is absolutely flat, now gravitating towards red terrain. The Adani Group stocks have been under a lot of pressure in the last few days. So today is no different. Adani Enterprises, Adani Ports are the big losers this morning, down about 1.5 to 2%. Reliance is also dragging this morning. That's interesting. So on the downside, you have a lot of heavyweights. Reliance, HDFC, ICICI Bank, Titan, and Adani Group stocks. In fact, Adani Enterprises is now down 3% straight off the back in early morning trade. So not a good opening, really. What's holding the market up is IT. HCL Tech, TCS are in the green right now. You have ONGC that's up about 1%. Wipro is in the green. And some auto stocks are holding up. Eicher Motors, Hero MotoCorp are just about trending above the green line. ONGC as well is up almost about 1%. But now the broader markets are starting to move into the red. So just be a bit cautious. The mid-cap index is down 50 points. The Bank Nifty is down about 18 odd points. So there's more red than green in the broader markets. And a lot of stocks. Z Entertainment is the one that's taking a big knock this morning, 7% lower now. And Adani Group stocks, Adani Wilmar, Power, Enterprises, Ports, all under pressure, down about 2 to 5%. So now the Nifty has moved into the red. Not a good start.
Well, that's right, Sonia. You know, that initial gap up was likely to get sold into, and that's precisely what's happened. Mahindra CIE, that's reacting to its numbers. That was indicating a positive tick, and that's opened up in the green. So after Sonata Software, well, they've acquired Quant Systems, a Texas-based IT services corporation company. But it appears that, that deal is quite large out there. By the way, we're talking about Mahindra CIE. Yeah, that's up for you on the screen. Sonata Software as well was indicating a bit of a flattish start to kickstart trade. But that, in fact, has opened up as well. So let's get the initial rates coming in on that one. That's up 2.7%. So for starters, the street likes it. They're being quite aggressive, but that's got a thumbs up. Z Entertainment, in pre-open, it was down even 7-8% at one point of time. It opened up with a cutoff around 5%. That's because the NCLT has admitted IndusInd Bank's insolvency plea against the company. They're likely to appeal against this, so keep an eye out on that. HG Infra, that opened up in the green. The company has emerged as the lowest bidder for a project in Himachal Pradesh. So that as well was up close to around 2%, or it's still holding in the green. And Sandur Manganese, well, only around 4,000 shares have been traded out there. But they're going to be getting to enhance their manganese ore capacity. So that's why that's up close to 7.5%. But keep in mind, there's just 5,000 shares that are traded on that one. Prashant.
All right. So it's a slow start, 20 points down, 17,540 is where we are at the low point of the day. I mean, the day is 2 minutes or so far. So give it time. I mean, you will get occasional bounces. You will get occasional sell-offs from there as well. So it's, of course, it has been clear for some time. The one-way nature of the market, is just simply not there anymore. It's volatile. Z is, of course, as everyone's been highlighting, down 6% at about 194 is the big volume traded knock that we have. Actually, most Adani stocks are lower. Adani Group stocks are lower by varying degrees. By 1/3 of a percent cut on ACC all the way to 5% on a few others. Adani Ports is down 0.5% or so as well. IRB should come up on your screen. That is a 7% knock on IRB infrastructure, which has come through. Stocks, I think, at about 32 or so. Big volumes as well for this time of the day. Varun Beverages should come up. It's down about 1.5%. 1285 on Varun Beverages. Tata Elxsi is down about 0.6, 0.7, and a few more. IEX, Bank of India, Policy Bazaar are these names. So, but volumes are still lacking. Advanced decline, it started 2:1, got to 1:1, now in favor of advances again by almost 2:1. So it's a fast changing landscape. Shilpa Medicare is up 4%. That has been very volatile last 5-6 sessions, but it's got volumes for this time of the day. Zensar is up about 2.5%. There is Mirza International, which is up about 2.5%. CG Power is up about 1.75%. And Lemon Tree, which we were just highlighting, is up about 2.5% as well. So that's the lay of the land. So nothing extraordinary or very large in terms of price action in the broader market. Nifty is, it's blinking red and green literally, down 1 point, up 2 points. So it's a flat, slow, quiet start. Sonia.
I just want to make a mention on one stock, Mahindra CIE. The stock is up about 2% post good numbers. Now that's important because the stock has already doubled in the last 1 year. And you know, we talk about Europe being in a slowdown, but Mahindra CIE has actually done well in their European business, saying that A, energy prices have cooled off, and B, the supply side issues are over. So it's not like all companies exposed to Europe are doing badly. And this has been one of the best performers in the auto ancillary space. So just wanted to point that out today.
Actually, for Europe, I mean, the incremental change has been positive, right? I mean, the new thing is positive. It's not more negative. It's slightly more positive. I mean, gas prices are a fraction of what they were. No longer a recession. I think UK said that outright, and I think more other countries in Europe are also saying that. So it's not dire anymore. Mahindra CIE on your screen. 16 points down, so flat start, at least 17,536 after the knock we got yesterday. Dheeraj Agarwal is joining us now. He's co-head equities at Ambit Capital. He's been advising caution the last few times we've had him on the program. Dheeraj, good morning. Great to have you with us here. What's the view now? I mean, are we entering a bit of a risk-off phase here, not just here in India, but globally as well?
You know, you'll keep on hearing risk off and risk on every 3 months alternatively, because that's what, as you rightly said, that's what I've been saying on the channel for the last few times I appear, and I reiterate the same, that the market's likely to be range bound for quite some time to come. I think most of this year for sure, maybe even longer, who knows. So every time the market falls, it looks like world's coming to an end. Every time it tries to rally, it looks like we'll make a new high, and neither of the cases is a true picture. It's an okay market. It'll be range bound. It'll just keep on trading like this.
Dheeraj, hi, good morning. I wanted your thoughts on banks. There are a couple of problems that are plaguing the banking space, right? One is that the margins are expected to moderate as deposit rates catch up. And two, the deposit growth itself is expected to see a moderation as well. Do you think a lot of these issues have been priced into the banks? Because if you look at stocks, right, I mean, SBI is down almost 20% from the highs in December. You think it could get worse before it gets better? And is this a good time to be buying?
So selectively, I think, one more point which I would like to mention is it's becoming very difficult and maybe counterproductive to actually paint the whole sector with the same brush. So as I was listening to your commentary sometime back that Mahindra CIE has done really well in the last 1 year as compared to most other auto ancillary stocks. And that's exactly what is happening, not just in that space, but everywhere else. So SBI after the 20% fall may be a good buy, but some of the other banks who are yet to fully price in the oncoming margin pressure may not be. And so two things are becoming very important. Within a sector, the stocks are moving in divergent fashion. And divergent not necessarily means underperforming and outperforming each other, but actually going positive and negative. So actually losing money or making money, that's one. And second, because of the range-bound nature of the market, higher interest rates and higher inflation, which we think will sustain for longer, markets have become very valuation sensitive. So your entry price has become very important, which was not the case, let's say, within 2014 to 20. Now you could buy at any price so long as the company was delivering good numbers and still make money. That's not happening anymore.
Hi, Dheeraj. Dheeraj, the point that Sonia was making on Mahindra CIE, maybe some of these companies with European exposure, they could be bracing for a good coming year, since there was so much of skepticism on them. And now those fears have not really worked out. Gas prices as well as lower, other input costs as well as lower. Do you think some of them offer a buying opportunity?
It's not a theme-based market at all. It's very, very stock-specific market. So to paint anything with the same theme that all export-oriented companies will do well, all Europe-facing companies will do well, all banks will do well, etc., etc., all of this is likely to go wrong. I think, I compare the current market phase with what happened between 2010 to 14. If you actually go back and look at that period, no themes worked, but bottom-up stock picking worked. I think we are back to that phase.
Talk about a couple of stocks then, Dheeraj. In the past, I think you've liked Axis Bank, you've liked SBI as well from a couple of those banking names. Would you look to get into a couple of those stocks on this dip?
Yeah, we still like them. I mean, as you rightly pointed out, banking is seeing or will see and hence will price in some amount of margin pressure. In few cases, it might already have been priced in. So both Axis and SBI on valuations now look fairly reasonable. Can be looked at the current prices, yes.
Dheeraj, you compared the current phase to 2010 to 14. The rally started late 2013, right? Elections were in 14. So will we find ourselves?
Yeah, it started from 13 if you actually look at the absolute lows.
It was October, November 2000.
Sorry, interrupted.
2003. Yeah. So, are you suggesting that is what happens next? Because next year we have general elections.
No, I was not actually comparing it to general elections. I was comparing more from a calendar point of view and the macro backdrop. So my thought was that the macro backdrop today looks very similar to that point of time. Slowing economy, stubborn inflation, etc. And the markets were range bound for almost 4 years. Remember, market crossed 2010 peak only in June 2014. So about 4.5 years later.
63, I think it was, 63.50 or so, right? That was the peak which held and took a long time. Let's hope
yes, yeah.
we don't get to, we don't see that kind of market is just sideways, range bound and, hard to kind of, there was action, but as you say, very, very, no real impulse one way or the other, no sectors really worked and a pretty disaggregated kind of thing. Dheeraj, but across your research team, what are you guys getting?
Very stock specific, very bottom up, I think.
As they say, there is always a bull market somewhere, right? So where are you guys finding the bull market in right now?
Not in the near term, not this year, not this this year in my opinion. Maybe even a slightly longer wait than that. So we'll see. We'll keep on reevaluating as we go along, but not in the near term. So as you rightly said, there's a bull market waiting somewhere. So there's a saying that you have to be at the right place, right time to be able to do well. So you just stand in the right place and wait for the right time.
You just need to know what the right place is, right? And when is the right time. But is this the right place and the right time for IT stocks?
Yeah.
Because we've seen a bit of a comeback there. And now companies are making acquisitions as well. The index itself is like up over 10% from the lows that we saw last year. Is this a good time to be buying IT?
So I think we discussed that last call as well. See, IT has outperformed the market, especially the banking space in the last few months. Maybe there is a little bit more. I mean, our strategists feel that there's a little bit more outperformance in IT. And that's more relative rather than absolute. So IT growth is slowing down. IT growth will get impacted because of slowdown in the US and Europe, even more than what's been priced at this point. But in the near term, what's happening is that we are seeing pressure on banking, we are seeing pressure on consumer demand, we are seeing pressure on metals and autos are very mixed. Pharma is still struggling. And hence 8-10% growth of IT sort of stands out. It's a little bit more predictable. Last 2 quarters, IT results have not seen any earnings cuts after the results. So that's also helping. Bit of Nasdaq rally is also helping. So there are lots of relative factors working in IT's favor, which might continue to work for some more time.
Okay, by the way, just wanted to get a quick check on what's happening in the market because it's falling further now. So the fall is pretty steep in the mid-caps. The mid-cap index is down 160 points. The bank Nifty is under pressure. Z Entertainment is your biggest loser, down 7%. And the Adani Group stocks are just getting whacked out of shape. So, just track that. Dheeraj, wanted your thoughts on how to, okay, you spoke about IT, right? And the moves that we've seen over there. What do you do with some of these new age tech companies? This is not the best environment for them. There are large-scale layoffs happening. There's an impending recession as well. But many of them are returning to profitability. Zomato, Paytm, Nykaa. What do you do with these names?
I think you have to be selective. So we like a couple. We like both Zomato and BB. That's Policybazaar, and we like Policybazaar. I mean, it's a good now stable business. They're coming back to profitability. Stock prices have come off in both the cases 60-70% or 80% from peak, and at the current valuations, a lot of that, the bubbly new age froth which was there has been skimmed off already. So time has come to start looking at some of these names constructively. I think there was a time when the markets lost a little bit of a sense of control on how to value the new age companies, and they were being valued on any parameter. And we have seen that movie in the past, right? We have seen the dot-com bubble in the past. So, but post the bubble burst, post 70, 80, 90% stock corrections, there are always a few gems to be bought and held for the long term. So I think that time is coming.
The time is coming. I think we saw there was a JP Morgan note, right, talking about new age companies and where things are starting to, if things are starting to turn, etc. Do you guys remember there was a famous, Warren Buffett made a joke. I mean, he was giving a lecture, one of his many lectures to students. He said, if I had to give a valuation exam to students and I'd hand out pieces of paper with questions saying, well, value this new age company for me. Anyone who gave me a right answer, I'd flunk. So
there is no right answer.
I mean, but stocks of course have seen 70-80% price damage, and maybe in some of these names, as Dheeraj pointed out, there is a little bit of value at the margin which is starting to emerge. Zomato is one that Dheeraj mentioned. The other is Policy Bazaar, right, Dheeraj? PB Fintech.
Yeah, that's right.
Okay, all right. We'll leave it there. Thanks very much, Dheeraj. Appreciate you joining in, and thank you for your time here on CNBC TV18. I think the market is down 60 points, which basically takes us to the low point of the day at 17,490, just under 17,500 or so. Sonia.
Absolutely. But I think one space that has done really well in the last 1 year has been defense, right? So let's talk a little bit about that. Bharat Dynamics has bagged export orders worth $255 million. The aerospace and defense major has also entered into multiple MOUs with several foreign and Indian companies during the Aero India 2023 that was organized earlier this month. To discuss what the potential of this could be, we're joined by Siddharth Mishra, the Chairman and Managing Director of Bharat Dynamics. Siddharth, pleasure having you on the show. Thanks for joining us on CNBC TV18. First, I want to just get this order inflow expectation out of the way, because as of November last year, your order inflow was about 2,950 crores. But the estimate is 10,000 crores for the full year. So it looks like you may not meet it, considering that, okay, I think we don't have Bharat Dynamics with us. Okay, maybe we'll have to wait a bit to get that question into him.
Just focus on the market, Sonia. By the time we get back with the management of Bharat Dynamics, just take a look at the markets. We're on the verge of breaking that 17,500 odd mark. In terms of an options data, well, 17,450, that's what the bulls are counting on holding out, at least for today. If by chance we start trading closer to that level or below that level, well, then plenty of bulls will throw in the towel. So just keep in mind, this range is very, very important. Bounces are likely to get sold into. On the upside, trading above 17,650. And on the downside, if you go below that 17,450, it could be not a great expiry, actually. And also, just take a look at the breadth of the market. We had more number of stocks that were advancing just in the first minute or so. Now those crisscross lines have completely turned around, and you have closer on two stocks that are declining for one stock that's advancing. So clearly pressure signs playing out.
No, that's absolutely right. So market breadth is completely turned around, and the advanced decline lines will tell you the picture. So they've moved in the opposite direction. So, 17,500 or around about there, just under it is where we are at. But I think, Sonia, we have the Bharat Dynamics management back with us.
Yes, we do. So let's get him going. I think Siddharth Mishra, who's the Chairman and Managing Director of Bharat Dynamics, has joined us now. Siddharth, is my voice reaching you?
Yeah, I can hear you.
Okay, that's great. Thanks a lot for joining us on the show. Before I talk about the orders that have come through, I just wanted some numbers. In Q4, or at least until November of last year, your order inflow was around 2,950 crores. But the estimate that you had put out was about 10,000 crores of orders for FY23. So the ask rate for Q4 looked very steep. Can you tell us what the order inflow has been up until now, and will you be able to meet this 10,000 crore target?
Yes, good morning. In fact, we have already reached around 4,500 crores, more than that, order this year. And there is one more big order we are expecting. And as I had told it before, that either by end of this financial year or beginning of this next financial year, we will be getting this order of 3rd and 4th Regiment of Akash. And I'm sure that we will be getting by then. So my this year's order book will be more than 10,000 crores.
10,000. You said you've taken in 4,000 crores of orders this year in FY23 so far. And
Yes.
the Akash 3rd and 4th Regiment orders
Yes.
will be coming in by the end of this financial year. Right?
Yes,
Maybe it
yes.
falls in this FY or the next one?
Yes.
Okay. And the total orders...
This will totally depends.
Yeah. Sorry, go on.
See, this year we have already, what I want to tell you that we already crossed 4,000 crores order. And more than 6,000 crore order we are expecting either by next month end or by beginning of next financial year. So we were expecting that this will finish it this year.
So these
Yes.
multiple MOUs that you signed at the Aero Show, what is the timeline in terms of execution for these orders? Will any of this come through in FY24?
See, all the MOUs which we have signed, the major one, there are 3 major MOUs. One is we have signed with Thales for laser-guided rockets. Second one we have signed with Edge Group of UAE for manufacturing of Al-Tariq guided munition. And third one we have signed with Bultex Pro. So these 3 things we are not expecting by next year, but certainly next to next year we will start manufacturing this in India, as well as we will get orders also. And these all the 3 items which we are going to manufacture in India is not only for Indian market. We have in the MOU we have very clearly mentioned that we will be working for the world market. So the manufacturing will be in India for the world.
Okay, all right. Hi, Mr. Mishra. Good morning. Talking about the world, out of your total order book, what is your order book currently? If you could give us an updated number, and how much of that is exports?
See, total number is more than 13,900 crores. And out of this, we have total value of more than $320 million of this is export orders.
320 million. So approximately out of the 13,000 crores, 2,500 crores is export orders.
Yes.
Okay, all right. Mr. Mishra, what do you end this year with? So order inflow you're believing is strong. It's likely to come through in the next 2 quarters. But what about execution? For this year, what kind of a revenue number do you end with? I think earlier we were talking about 3,200 odd crores. You've done around 1,700 crores in the first 9 months. What do you end FY23 with? And what about FY24? Since execution will pick up out there, what's the growth we're working with? Go ahead.
See, this year we are very sure that we will surpass last year's target. And at least 10% growth will be there in our revenue from operation. So we are looking at between 3,100 to 3,200. And next year, our target will be not less than 3,800 crores.
3,000. And what about margin, sir? What is the outlook out there?
Margin, see, margin we are looking more than 20%. We already in 3rd quarter we have around 19%, and it will be more than 20% by end of this year.
But
so final margins will be not less than 20%.
So if you look at it, in
Yes.
FY20, of course, that's not a comparable year. A lot happened after that. Even in FY22, your margins were almost at 25%. Now that your orders are going up, you have strong order
Yes.
visibility. Do you think you can get back to 25% margins by the end of FY24? Is that a possibility?
See, we had, if you compare our value of revenue till Q3 and margins have certainly come down, but this has come down because my R&D expenditures have gone considerably high. If you compare it from year on year, from 32 crores, we have crossed R&D to 100 crores, more than 100 crores. And this is because now we are getting into a lot of new products. The latest product that is our UL PGM, that is UAV launched precision guided missile, has already cleared user trials, and we may get some orders very soon. So because of these new products which we are getting into, my R&D budget has gone up, and because of that the margins have come down. But I'm sure by end of this year end, our margins will cross at least 20%.
Right. Will be 20% plus. What is the steady state revenue growth though? You said 10% 23, FY24, the implied growth is 20%. Will it be, what should we expect? Will it be, between this range, 10-15% or so? Is that what one should work with?
See, this year minimum 10% growth will be there. That is around 3100 to 3200 in between these two. And certainly next year it will not be less than 3,800 crores.
So that is 20%. My question is, what is will it be lumpy depending on the orders and execution? So it could be, or is there, a broad number in terms of top line growth that one can work with?
See, certainly. No. See, I'll tell you, we already have now the order books, and this year the growth, we were expecting a higher growth, but because of this Ukraine-Russia war, there is some issue of electronic components we are not getting. But we have mitigated all the issues. Now the production has picked up, and I'm sure by next year all pending orders we will start executing. So certainly 3,800 is a good possibility.
All right, very quickly, Mr. Mishra, before we let you go, things are looking up for the defense sector here in India. There's a lot of focus out there. I recall when you came out with an IPO at around 424-30 rupees odd, appetite wasn't great and the stock was languishing. Now the price is almost double. What the government of India wants to do they want to divest some stake? They hold currently around 75%. Have you heard anything in terms of an OFS or some stake sale?
No. I don't think, I've not heard anything from Government of India, and to my personal view is that there is nothing in recent future any more disbursement will take place.
Okay, so
but it totally depends upon Government of India.
Absolutely, we agree that the decision will eventually be taken by the Government of India, but you have a better understanding than us, hence we wanted to get an update on what the situation is on the ground. Thanks a lot for joining in. Appreciate all the numbers that you shared with us and the growth for the company. It has been one of the strongest stocks in the last 1 to 2 years, given a lot of returns to shareholders, so hope you continue to do that. Well, on the other side of the break, Nissan Joseph of Metro Brands will be joining in to discuss an outlook on their business. We'll also connect with